Hello everyone, welcome to Let There Be Light. Let There Be Light is a thought leadership series brought to you by Akinwumi and Busari Legal Practitioners, a foremost commercial law firm in Lagos, Nigeria. On Let There Be Light, we discuss the Electricity Act 2023 and how it impacts the electricity market in Nigeria. Previously, we've had guests, seasoned professionals and experts in the energy, policy, and financial sector. On today's episode, we have a seasoned finance professional, the group head of Renewable Energy and Sustainability Finance at Sterling Bank Limited. Please welcome Mr. Oluwaseyi Okunnuga. So for our viewers at home, those watching, I want you to explain the kind of work that you do, being the renewable energy and sustainability finance professional that you are.
Okay, thank you for the question. The position states, renewable energy and sustainability finance. Our responsibility, or my responsibility within the bank, is to develop alternative way of deploying or supplying energy to the public. And that would including exploring other alternative sources of energy, which will include solar, wind, turbine, which come with turbine, biomass. So that's our job. So where do we come in as financial institution? As financial institution, our responsibility in Sterling Bank would be first to understand the sector, the renewable energy sector, which is the alternative energy sector, clean energy. Understand the technicalities, understand what comes with the financing. So what, as financial intermediation, as a bank, our major role is financial intermediation. But of course, when you are bringing in funds from different sources, public funds, funds from DFI, funds from depositors, you need, and when you are also, providing it, availing it to experts within the renewable energy sector, developers most especially, you need to understand the market and the workings. So what we've done is that we understand, apart from understanding the financial aspect of financial intermediation, we also go the extra length to understand the technicalities involved in the business. So to that end, we've engaged the services of professionals, technically competent engineers, most especially, apart from financial savvy experts within the system, to interpret and develop solutions that will assist developers and other stakeholders within the renewable energy market. So that is what we do. And in our commitment as in Sterling Bank goes around 5 major sectors, which we call the heart of Sterling: health, education, agriculture, renewable energy, transportation, in no particular order. And my responsibility is to drive the renewable energy part of the heart of Sterling. But interestingly, the renewable energy part, which is the Power Act, cuts across the entire 5 sectors: health, education. You need health, you need power. Education, you need power. Agriculture, you need power for irrigation. And in transport, you also need power. Right now, we have EVs right now, that's electric vehicles. And Sterling Bank is also leading within that space where we are deploying EVs, that's electric vehicles, mobility within that space. And you need charging station and the rest.
From your perspective, how would you describe the investment landscape of the power sector right now?
Oh, yeah, that's a very good question. So that's where we are currently. In terms of major infrastructure, we are grossly lacking behind, and that is under the conventional power, which is the one we know. We are familiar with the hydro and gas-powered power generation. We essentially load power on the main grid. Our main grid infrastructure, is debatable. Can do about 6,000 megawatts. You need some level of latency, which can do, so latency maybe 4,500 megawatts. Even if you are going to stretch the entire 6,000 megawatts on the system, you might have a grid collapse, amongst other things, that happens within this sector. For a country that is looking at a 40,000 to 50,000 megawatts of power, the infrastructure has to also match up, meaning that I have to develop an infrastructure of probably a 40,000 megawatt transmission capacity. And that's billions of dollars. The government is doing a lot. There has been deal science initiative around that space. I think this is something that as a country we should have been doing almost on a daily or on a yearly basis to arrive at the 50,000 megawatts we are looking at. But we have not precisely been doing much within that sector, though the willingness is there on the side of the government to do more. And that is why they've come up with the Electricity Act, which essentially allows states to generate their power, transmit and distribute as well. For us, it's a democratization of power, which we essentially encourage captive market, which will also allow us to do what you call the decentralized energy solution, where states can have mini grid or mini hydro system and supply power to it within the state. In that case, you can allow investors can come, encourage investors to come to the state to fund projects. And it will also allow developers to have almost a direct engagement. The bureaucracy that usually happens at the top would have been cut down to the state level. And for a state that is really, really committed to its citizens, will go all the way to ensure that power is deployed.
So from your answer, I can tell that you very much believe that the Electricity Act 2023 is a very good step in the right direction, basically, for us to, open up the markets, for us to also generate and distribute. You mentioned that now that we have the states have the capability to generate their own power. It sort of like gives a positive end results on both ends. So if I get you right, you very much believe that this Electricity Act is a step in the right direction to take us from where we were, to take us somewhere more progressive.
Yes and no.
Okay. Why no?
Okay.
I want to hear the no first.
Or yes, and I would say yes, but of course you have challenges along the line.
Yes.
This anything that comes with this is a new initiative, right? And as a government, what the federal government is doing is they are trying different models, adopting different approaches to solve the power problem, and of course the act is one of it. Before I come back to the act, right, some of the other things the federal government has done is to set up an agency called like the Rural Electrification Agency of Nigeria, where they focus on deploying energy solutions to areas that have not probably seen light are totally off grid. Through the agency and through the federal government, they've raised millions and millions of dollars to foster the development and deployment of power within the sector. The recent one is the DS program, which through the World Bank, which is about $750 million, where a lot of developers have been shortlisted to execute projects across the nation. So you are looking at the act, you are looking at the agency, you are looking at the willingness, of the government to also get funding, through other multilateral agencies, DFIs and everything, just to foster. So the commitment is there. Now, coming back to your question again, why do I say yes and why is it a bit disturbing? Again, I said it's disturbing because it will go through challenges. If you want to test anything that is good, it goes through fire. And everybody has gone through fire one time or the other, So even you as a barrister, you probably have gone through fire, coming out from law school. So the process is new. So it has to go through testing. The first testing, I will say, is, there are about 7 states that has
gotten their license.
They've gotten their license and they've started, operating, maybe not at full throttle, but they've started. And I'll pick Enugu State.
Okay.
As you know, Enugu State kicked against the current tariff of about 260 naira, and they requested that the tariff be brought down to 160 naira. And it is the local or the State Electricity Act body that has, and that's the essentially the state that has insisted that power must only be sold at a rate tariff at 160 to its should I say citizen?
Well, residents.
To its residents within the state. And as you know, even the conventional power, the discos are, also having their own challenges, with trying to survive, right? They have infrastructure challenges, they have funding challenges, they have debt challenges, and they even have challenges with the generation company as well. And there's still some level of challenges with the transmission, but not much, because, not much. And right now, the arrival of the Electricity Act in Enugu has brought about challenges for the disco already, right? What it means is that the Enugu disco will probably have to start selling power to other states, neighboring states, and there will be shortage of energy supply to Enugu
residents.
You understand? Because the tariff doesn't just match.
But how can they level up? Because it might be bad news to the discos, but good news to the residents.
Yes, it's going to be good news to the residents, right? But in the immediate, what it means is that they won't be getting light. So it's like putting a price tag on something you are not getting. There's a price tag that you like, 160, but is it available?
Yeah, is it sustainable?
Essentially, sustainability is out of the window right now. So while it is good, right, what it means is that independent power companies would have to quickly move into the state and deploy infrastructure that will attend to the power demand of the state immediately. But as they're doing it, they must have at the back of the mind that the rate will probably be around that 160 or thereabout. So it creates an opportunity. It has its own backlash to existing power companies, the discos. It has its advantage for state development, to accelerate development, to also accelerate economic development, because the cost of power will essentially be, reduced. But I must tell you, the cost of deploying power infrastructure, whether it's the conventional power, whether it's renewable, whether it's wind, whether it's biomass, whether it's the hydro, is not cheap. Even before approaching the bank, the cost of infrastructure assets, we will call it, could be high. And that is not to say that the cost of funding also has its own challenges, getting the right kind of funding to be able to deploy the solution. So it's good. It has its good and it has its bad end, but I think at the long run, it will be fine-tuned. It will be fine-tuned to fit the people, to meet the people's need. I think the like of NEC will probably have to step in to probably manage how tariff are essentially administered. I think that's it.
Thank you very much, sir. On today's episode, we have Mr. Oluwaseyi Okunnuga, the Group Head, Renewable Energy and Sustainability Finance, Sterling Bank Limited. We'll be back shortly. Sir, what, in your experience, are the common challenges that developers face with accessing funds?
Okay, that's a very good question. And it is important because we are in an infrastructure and development space. Like it or not, renewable energy is infrastructure. And as a financial expert, or I would say financial institution, be it bank, investors and everything, what they look for are, I will try to narrow it down to 3 critical things, or maybe 4. Number 1 is the fact that there is a demand for that particular infrastructural need within the environment. Number 2 is that the asset or the infrastructure in itself, when deployed by experts, does perform, it functions very well. Not that it's installed, after commissioning it breaks down. That would be a whole lot of waste of capital. Number 3 will be that operation of the asset does bring in the desired revenue, right? And that starts from the very beginning. Start with number 1, when you have done your feasibility studies and everything to ensure that the demand is really there. Most of the time, or what we pay attention to is the productive use of energy. So if there is a productive use of energy, there will be demand for the infrastructure that is in place, in as much as the infrastructure has been rightly sized. When I say rightly sized, rightly designed for for that environment, for the purpose, then there will be revenue. We'll call it, revenue assurance, meaning that you are sure that after deploying this, there's revenue coming out of it. And the last thing, which I said, the 4th one, is that there's impact. There's impact, and that across the entire chain. Impact for life, for social life, impact for environment, the climate. This fits into the Sustainable Development Goals, and impact for job employment, impact for economic development and all sorts. If as a developer you are able to tick these boxes right, it is easier for a financial institution such as Sterling Bank to finance you. But in most cases, what we find out is that a lot of businesses, a lot of developers are not able to put their business plan together such that it will be convincing for an investor or a financial institution to stake its fund, whether it's debt, whether it's equity, in the business. And it starts with, conducting the right kind of visibility study, engaging the services of competent professionals, competent partners to work with you. In most cases, when we are approached by developers or contractors, that want to develop or finance a project, we end up as an financial advising them, taking them through the entire process to ensure that these critical points that I've mentioned earlier have been addressed. In that way, it will be easier to access the funding. Now, accessing the right kind of funding is a different case. When I say right kind of funding, whether you're able to get, that depends on the kind of structure that is essentially deployed, for any kind of project.
So in a city, you mentioned demand, you mentioned impact, right? And you also mentioned revenue. There has to be the potential to make revenue. You also mentioned productive use.
Yeah.
It all sounds funny to me, and I'll explain why, right? Definitely, there's always going to be demand for electricity. For productive use, what do you exactly mean by that? Are you saying that it has to be something that is generating income for the people using it, right? Like, so the term productive use, because I just want, for example, I just say, if I'm not an employer of labor, I just want to have electricity at my work, if I'm a self-employed single person, like single one-man business kind of person, right? And what will you say constitutes productive use for the developer that wants to then build a business plan? That's on the one side. Then on the impact, are you going to pick a developer that is able to show prospect of revenue over impact? Because sometimes impact might be in the long term. The impact would be in the long term, or the revenue rather could be in the long term, but then the impact is actually in the short term. So would you say impact should ordinarily trump, prospect of generating revenue? Or how would you then put it? Because it would mean that the parts that probably really need electrification, right, would maybe not get it because, depending, so for example, like more rural areas where there can be like development, or where there can be like, as a result of them having access to energy, right, they can then, in the long run, have the prospect of generating revenue. So I feel that it might maybe shut some people out. Where is there going to be a balance?
Okay, well, very good question. I like the way you approach it. The case you present is like, which one comes first, the chicken or the egg?
Exactly.
You understand? But a journey of 1,000 miles starts from a step. We don't have all the answers. But what I will tell you immediately regarding, I'll first try to explain to you what productive use of energy means.
Yes.
Productive use of energy will mean that the use of energy is essentially to better the condition of life of an individual or an organization, whether SME or maybe a large corporate. And when anything that is adding value, right? Anything that is adding value, people do not resist paying for it, right? So if you have energy as a tailor, you have energy as a welder, you have energy as a farmer that is processing cassava, that energy is giving you value. And you know that without power, day 1, day 2, day 3, day 4, all your stock of cassava will not be processed. And the day you see light or power, you are willing to pay for it. So there is a value exchange. And when there's a value exchange, people tend to pay. And that is a productive use of energy. There is also a part of it, which we are aware that people essentially just want to use the power to watch, Nollywood movie, understand, watch football and everything. They just want fun. They just want to listen to radio at home. For anyone that wants to live a better life, for you to be productive, you also want to sleep at home well before going to your place of work. Otherwise you won't be productive. So while there's power at work, you also need power at home, to improve your lifestyle. Otherwise, there's a level of frustration for anyone that is going to work that has been battered with the absence of light. So there's also an improvement for that. But that's the ratio of that to the productive use of energy shouldn't be much. The productive use of energy, subject to the financing need, could be as much as 60 to 70% of the power need. So you go to an environment, a locality, an area where they are into so many businesses, farming, tailoring, whatever. And the need for energy is there. You can be rest assured that there will be energy take up. They will buy into it. Now, you spoke about impact. As I said, impact, some impact you feel immediately.
Yes.
Some impact is at the long run. For an environment that is constantly using charcoal, or they are bringing down wood or trees, they are bringing down trees to generate power, fossil fuel would, after a long run, start feeling a better climate, better environment, reduced pollution within that locality, because they are not falling trees, because they are not burning fossil fuel. They're able to keep their vegetation, in order. So that could be, impact gradually. And another impact would be employment. As you continue to have industries, companies coming up within the environment, there will be a need for human resources. People get employed. It's a gradual process, but it will start. And concerning, the other time I was saying which one comes first, whether the chicken or the egg. Ordinarily, if you look at an environment that is well populated, you want to be sure that, okay, you might take a bet on deploying energy solution as a test run in that environment and see how they take it up. For the purpose of this discussion, you might decide to say, instead of deploying 150 kilowatts of energy solution, solar energy solution for the environment, you can decide to deploy maybe a 30 or a 40 kilowatt peak solution and see how it is used. If it's used judiciously or is used for productive use, you now start seeing people doing different trade and everything, then you can scale up the capacity of the solution to 100 to 150 and thereabout, and that is how I think you could also attend to areas that are seemingly not they are not really productive, which we have. But of course, you probably want to, as a developer, if you want to take a bet, you probably want to use your funds, your personal funds, or, to do that, and make a case for demand.
Yes. I mean, so you've gone back to using personal funds, which means that if, as a developer, for example, I do not meet all 4 metrics that you mentioned, then it will mean that I have to resort to my own personal funds. So if I was going to reposition myself for funds from Sterling Bank, how should I reposition myself? Do I need to show you that I will meet all 4 metrics immediately, or that it will be staggered? And if it was staggered, is that something that the bank will then advise that, okay, we can actually help you build a structure around this, rather than, I going back and saying, okay, well, my personal funds. So how would the bank now come in?
Yeah, you've answered the question already.
Yes.
So in the beginning of our discussion, I said Sterling Bank has gone into this sector deliberately, not to just become a financial intermediator, not to just grant loans. We've gone into this sector, the 5 sector I spoke about under the hard sector, deliberately. And to do that, we've engaged the services of experts, within the renewable energy sector to provide technical advisory, financial advisory, legal advisory as well, because you have, power purchase agreements, MOUs and everything, you want to be sure. So we've done that deliberately. So having put up our structure in this way, our offerings are in 2 parts, or is in 2 parts. One, the advisory I spoke about. We'll sit down with you, work with you, structure your deal or your business plan in the most realistic way. We'll call it in the most bankable way, make it bankable, either to us or to other financial institutions or investors. We make it bankable. Then, if, for something we believe in, for something we would have advised you and, we know that is very convincing, we can also finance you. So we'll do the advisory, we do the financing. So in Sterling Bank, we will not leave you in the rain. Right. So even we will not leave you in the rain. We would, Sterling Bank is a one customer bank, and for every single person, we pay absolute attention to their need to ensure that their dreams or their desire really come true.
Okay.
So we won't just give you the money and go away.
You hold your hands.
No, we take you through the journey.
All right. What are the top risks that power investments potentially face, and how does the bank de-risk them, or how does it properly position?
For any business, for almost any business, at least for businesses that are, transparent, for any transparent business, let me use that one. For any transparent business, you are subjected to regulations and policy. If the regulations are very friendly, the policy and regulation are very friendly, the chances that the venture or the business will do well is guaranteed. You don't want a policy somersault. The other thing within, now I'm narrowing down to the renewable energy and climate finance business and sustainability finance. The other thing will be the FX market, okay? The foreign exchange market. I mean, the rate at which you buy dollar, about a year ago, 2 years ago is different from what it is right now. We reckon that the exchange rate right now has been stable, which is good news. And it's a good news to developers, to investors, to the entire business community. But the risk is still there, because for any investor, you would not, because the system is stable, it appears stable, you will not still ignore the fact that there's FX risks. And that is because, one, majority of the equipment are, either imported. Two, you have funding coming from DFIs outside the shores of these countries, of which there are no free funds, many that you have to repay. You don't want to, so at the time of trying to repatriate those funds, you want to be sure that the rates are not significantly different from the cost of acquiring, of getting it.
What is the percentage of the availability of local currency funds, and how can that be potentially increased?
The truth is that there is sufficient funds from depositors' fund, within the banks to attend to the renewable energy sector or to the power sector. The question is whether the depositors' fund is the right kind of fund, to finance the sector, to finance opportunities and development of the sector. So because, as you know, the commercial rates are quite costly, and most developers seek concessionary funding, and this concessionary funding will come from different stakeholders within the renewable energy industry or within the sector. Concessionary funding could come as a way of grants. It could come as, it could come from donors who, maybe from a foundation, for example. You get funding, concessionary funding from DFIs who are committed to green climate finance. They probably avail funding at a very lower rate. They are financing from, World Bank, to accelerate the development within those sectors. There are so many developmental financial institutions within and outside the shores of this country that can avail such funding. But it also comes with different terms and conditions. And in Sterling Bank, those are part of our responsibility. That's part of our job as advisors, to ensure to prepare a developer for those, to prepare the developer with the right kind of information to be able to access those kind of concessionary funding. So apart from this funding, concessionary funding that you have, utilizing it also depends on the structure that either private organization or the government have put in place for you to have access to some kind of funding. For example, the Rural Education Agency of Nigeria practices what you call a performance-based funding structure, where developers would essentially, perform on a project. After the project has been confirmed, done, and commissioned, they are able to access their funding. You could also have funding that are raised by funding through bonds. You have the Green Climate Bond, for example, which
how
promises.
accessible are those?
Yeah,
and how popular?
Yeah, it's quite popular. Well, it's gradually in the country we're beginning to. We have organizations that are raising bonds. Sterling Bank, for one, is also working at raising a sustainability finance bond, which will allow businesses practicing sustainability practices.
Mm-hmm.
Companies within that sector to be able to access those funds. Usually the bonds can give you up to, definitely above 5 years, some 7, some 10 years. The pricing is friendly, and the developers are able to, have it for a long period. So you also, as financial institutions, also come up with other, ingenious way of structuring financing for projects. That will probably include blended financing, where you mix commercial funding, grant, intervention, DFI funding, to come at an average pricing that is affordable for a project. That is also an option. What really makes pricing so essential in the whole structure of developing a business, you want to be sure that your return on investment at the long run makes sense, and you want to cut down on costs, not compromising standard and quality, but ensuring that your business as a developer or energy provider is sustainable. So there are other instruments that encourages affordable cost of fund. You look at the credit enhancement guarantee. There are some organizations that avail financial institutions such as Sterling Bank with guarantee for loans that are going to be availed to energy provider or developers. This credit enhancement or credit guarantee takes care of a certain percentage of risk associated with the amount you are disbursing or granting to a customer, and that reduces the risk of the bank, and essentially should, and in most cases, reduces the risk, the pricing, the cost of fund as well. Other things, other financing opportunities will include sustainability-linked loans, which is also available within the system. But to access this funding, you need financial experts, those who really understand the tricks, the tricks, the conditions, the terms of accessing this climate finance fund.
Thank you very much. You've basically taken us on a school. You schooled us today. But one thing I would like to highlight from this last answer, the question to the last answer, is that there is the availability of local currency funds. However, it might not be the right type of funding for power projects. And to determine that, then developers need expert financial advisory to determine what sort of financing will be best suitable for the project. And I will also say that one thing that stood out is to look out for the Sustainability Finance Fund by Sterling Bank. I believe that that would be quite interesting, and I believe that is going to be also Naira-based.
Yes, it could be.
It's a mix.
It's a mix. It's a mix. It's a mix. You know, earlier we spoke about the fact that the preference for this sector is actually LCY, local currency, because immediately it eliminates the FX risk, because the revenue from these projects are in Naira.
Yes.
It's a different case. I can avail you with an FCY facility if your revenue is in dollars. I mean, it's easier to match the risk. But in a case where your exposure is in FCY and your revenue is in LCY, there's going to be a major challenge. Things might look good in the immediate, but in the future, you are sitting down a keg of time bomb. So, but you don't want that, And what is also important to us in Sterling Bank is to ensure that we record more successful transactions. The more successful projects and transactions that you record, what it means is that you have more developers coming into the sector, you have more DFIs, investors coming into the sector as well.
Yes, and I very much believe that the Electricity Act 2023 has, paved the way for all of these opportunities.
Definitely.
So to my last question, if you were going to just describe the act in one word or maybe one sentence, what would it be?
It's a roadmap towards the right direction. There will be roadblocks, there will be potholes, but the journey of 1,000 miles starts with one step. Right now, the Act promises a lot of opportunities for the public, for private investors. It promises the public that tomorrow there will be light, right? There will be light. And it also brings the state rulers, the state governors, closer to the people. Is not, power is not now being administered from the center, right? Though there will still be some level of control. But right now, the people are closer, to the government with their initiative, and investors can also speak directly to the states. The bureaucracy is eliminated. So I think there's a whole lot of opportunities that the Act promises.
All right.
Thank you.
So thank you so very much, sir, for coming today and for joining us, for educating us as well today.
Thank you.
We highly appreciate it.
Thank you. Thanks for having me.
Thank you so much, sir. So, like Mr. Oluwaseyi Okunnuga has said, the Electricity Act is a roadmap taking us in the right directions. There might be roadblocks, but tomorrow there will be light. I remain your host, Ayomide Bello.